Yo, what is good? We're gonna go over the week. We're gonna go over. You'll only be able to see this tab right here. I will be speaking and reading some things off of kind of like a terminal. As you know, I can't show the new terminal yet because they're still not released to the people. I will be reading some stuff, and then we'll go over the technical point of view. But just make sure you like more pay attention to my words, and then pay attention to the technical portion too. 1 second. All right. So I just have some comments. Basically, it's gonna be a pretty easy week. Um, every single smart bias update, let me just make myself smaller here, has talked about the energy crisis, especially with energy importers. And I wanted to specifically focus on energy importing countries. And if you remember the MUFG article from months ago before the war started, or just shortly after the war started. I think it might have been maybe a week or two after the war started. They had said GBP USD, Euro USD, the yen, you pretty much any JPY pair, especially compared to the USD, they're going to be falling overall from their energy shock. Now, we did have some negative things, as you might have already read. If you haven't, then make sure you read Smart Bias before you watch this video. Go ahead and stop the video and read the updated Smart Biases for every currency. And then from that point, then watch this video because this is in context with that. We only need a few trades every week really to have return like better than what most people do, and we're like in the 1% of people who can return a decent amount every month. The euro initially it says the euro has had a generally soft and headline-driven week, trading less on domestic conviction, more as a function of Middle East geopolitics, more as a function of Middle East geopolitics. Oil price swings and the associated push and pull between risk sentiment and the dollar. As you know, the euro and the dollar are compared to each other, and so it's like the pound and things like that are compared to each other. So whenever the dollar does well, they by default fall, much like the risk currencies. Um, Early in the week, the euro came under pressure as Iran-related escalation drove higher energy prices and reinforced concerns about the euro's vulnerability to an external energy shock. If you remember from the MUFG article, they had said that this might be priced in if the war continued on, and it's been well over 50 days now at this point. The war's, the conflict is not necessarily a full-scale war yet. The conflict it's still here. So the energy shock that they were referring to that would weigh on the euro, even despite the fundamental backdrop potentially at that time at least being positive. They're looking forward to some things like euro growth and things like that. But they were saying that it depends on the energy shock and how long this war goes on. And we already explained how the energy shock works and how it drops the currency and all that a while back. Although a broader dollar weakness on Monday limited euro downside, that support faded as the week progressed and greenback regained traction during periods of geopolitical stress. The greenback is the finance name for the dollar. The domestic euro area story deteriorated throughout the week. German and euro area sentiment and activity indicators weakened materially with Tuesdays with Tuesday's DEW survey disappointing sharply and Thursday's flash PMI showing services slipping into contraction. These are all euro negatives alongside a backdrop in the composite index, another euro negative on top of the geopolitical premium that they were just referring to and that they have been talking about prior. At that same time, the inflation side became more uncomfortable. German PPI surprised strongly to the upside. And here's that kind of like weak growth, strong inflation deal that they've been talking about in these bank reports. At the same time, the inflation side became more uncomfortable. German PPI surprised strongly to the upside on Monday, and the Thursday's PMI details pointed towards a re-acceleration in input and output price pressure, described as the biggest surge in euro area cost price pressures since 2000, the year 2000, excluding the pandemic period. That this left the euro facing stagflationary mix of weaker growth but more persistent energy-linked inflation. So it seems like, and it's the same thing for the pound. The pound has a overall, and like their overall. I'm just gonna read that part of it because it pretty much sums up what is going on with the euro. I could go on and read the rest, but I'm gonna leave that up to you. I already posted it for you. The fundamentals are neutral. Bank overview is bullish, right? It's like long term. Technicals are in a range. Sentiment right now is weak bearish because of these things that I just mentioned. Hedge fund positioning is bullish. Retail positioning is bullish. And this is like without me looking up the COT report yet, which I'll do in this video as well. Monetary policy is neutral. Trend is range, and the range and seasonality is bearish. So you can go and honestly go look at the seasonality swing strategy that I posted in the private market terminal. Um, what's it called? Where they break down the three strategies that you can use, three or four strategies that you can use that are proven and profitable. Overall, they are weak bears just due to these things having going on, right? All those things pointing to a downside for the euro, right? So that means that from the like this is the first time, not the first time we're hearing about it in the market, especially for the pound, the euro, the yen, major energy importers, like those countries, um, they're gonna be going down a ton because of the same deal. And we had already heard about if you read bank reports, which if you don't, you're truly playing yourself. You definitely should be reading bank reports. Um, we had already heard about the weaker growth and persistent inflation deal that would go on if the war continued, or I wouldn't call it a war just yet, the conflict continued. The wars when people are continuously fighting without resolve for years and years to come. It's only been a few months and some bombings here and there. And yes, some people have died, but we do have, I wouldn't say a full war, just a conflict on our hand right now. A full-scale war would be a much more devastating. So we have a conflict. The fact that we're negotiating and we're having negotiations throughout the weeks and going on, but people are willing to hear each other shows that this is not a full-scale war just yet. This is a conflict. People have indifferences and beliefs that they need to work out. So that sums up for the euro, you know what I mean, in terms of everything that happened to cause euro downside, the sticky inflation and the lack of growth. Lack of growth is something that like GDP and things like that is something that you would have to cut for, by the way, as well. And then sticky inflation is something that you would obviously have to hike for. So with that being said, you'd be like, okay, well, which one would they do? You know what I mean? It depends on which one is suffering the most. They kind of analyze the moves based on the data coming in. National growth downside compounded the drag. Downgrades compounded the drag. Germany cut its 2026 and 2007 growth forecast on Wednesday, while Italy and France also downgraded their growth expectations. Friday's German IFO and French consumer confidence added to the picture of a fading momentum for the euro. These developments helped explain why the euro underperformed on Wednesday and Thursday, with market commentary explicitly citing euro weakness as one reason the dollar stayed firm. ECB communication broadly reinforced a cautious wait and see stance rather than offering a clear hawkish impulse for the currency. Officials repeatedly emphasized uncertainty around the duration of the Iran war shock. Iran said that there was not a set rate path, et cetera, et cetera. Same stuff we've been seeing. By far, the euro managed to recover modestly and snap a 3-day streak on renewed U.S.-Iran talks and improved global risk appetite and weakened the dollar. Even so, and I've already explained to you a million times how that works. Even so, the broader weak narratively, it was a negative to mixed week for the Euro USD. The euro was way down by weak area growth data and things of that nature. So here are some like I know I said I wasn't going to read this, but I feel like I was kind of cheating you guys and playing you guys of like the actual video. EU policy response underscored by severity of energy risk. EU and member state measures and discussions around fuel disruptions, gas shortage, alternative supplies, and additional energy aid highlighted the region's concern over persistent energy disruption. This is what they were talking about. This is what we've been reading in these bank articles. And it's really, like I said, about a thing where like they might analyze some stuff, but doesn't mean it's going to come true. In this case, the energy shock for the euro, the pound, the yen, and any other major energy importer has come to light. The weak growth, the real growth, high inflation is starting to kind of bleed into these economies via these reports. And that's why these reports are important because you can hear how they apply and what they measure and what they show and what they're looking at when they're looking at these reports. And then you just take note of that yourself. And now you have more knowledge, literally that easy. EU policy response underscore the severity of energy risk. So we had the German PPI rising, the ZEW sentiment survey drops. Germany's growth, they revised their growth down a lot. France, they revised their growth down a lot. These are some of the biggest economies in Europe. So they had growth forecasts were cut across key Euro economies. They from 1%, Germany cut from 1% to 0.5%, and from 0.9% to 1.3%, or no, from 1.3% down to 0.9% in 2027. And then before the one I was saying was 2026. Italy and France also downgraded growth to expectations, adding to euro area macro pessimism. And that's just basically been the sum of it. It's just a bunch of euro negatives, safe haven inflows into the dollar midweek, and that's why we took euro USD shorts and GBP USD shorts because GBP, the pound, even though it's weak bullish right now because of on long term, we do have they did mention in the pound that they had the only thing getting in the way of the bullish momentum for the pound is the energy shock as well. And that the war going on and the natural lift to the dollar when there's safe haven influence, things like that. And that's kind of why we've been trading the way we've been trading because this is what the market is focused on right now. Um, and I kind of wanted to comment about that for the euro and the pound and really the yen too. They all kind of facing the same problems in reference to being major energy importers. And it would be like you have to take the low hanging fruit. You know what I mean? If you learn a fundamental about how this war affects things, every time, I'm gonna watch bank reports. I'm gonna read bank reports. I'm gonna be, you know, making sure that I'm doing my research on my pairs to see what's really affecting them and what they predict is going to affect them so that I can kind of see if that comes into fruition, even if it's a few months down the road. And once they start kind of talking about that in the articles, then and saying, hey, these things are affecting it, then you can start to kind of price that in and you can read what the market is price and be pricing in. So um with the US dollar, we already know the story of that. This is going to be moving up and down based on talks in the Iran war. I'm not going to go too much detail, but because of the Iran war going on and we have better than expected employment data and things of that nature, we will be um, we bullish on the dollar overall. Seasonality is bullish, sentiment is weak bullish. Make overview is bearish. Hedge fund positioning is bearish. Retail positioning is bearish. And that's because they're like, once the war is not really a factor, the dollar's gonna fall, like it had been. You know what I mean? As soon as there's peace talks going on, the dollar falls, and when there's like more conflict going on, the dollar rises, right? And we already know how that works with the risk on markets. So naturally, I would just keep with all the headline shifting, I would just keep your trades very short. And things of that nature, keep it at like between 1% and 2%, I would say anywhere between 1% and 2%. I don't care if it's 1.7, 1.5, 1.3, 1.1, where you're just doing a 1-to-1 risk reward ratio or a full 2%. It truly doesn't matter. But I would keep the trades at maximum of 2% because of how the risk sentiment can shift with just a simple headline can take out your trade. So that's why we took Euro USD shorts and GBP USD shorts and ended up gaining like 4 point something percent, if I remember right. Maybe with a two, like 3.8, 3.9%, something like that, somewhere between there, 3 and 4% for the week. So, and at the end of the week on Friday, they had some more peace talks, which is why we had that retracement. And how I was able to take this trade NZD USD is that I took it off of those peace talks that I mentioned and I entered here after the liquidity sweep, right? So swept, this is discount. This is coming up from the from sweeping a low right here and building a high resistance liquidity void, et cetera, right? So this is all what is it called? Conflict right here. And this is all peace talks and optimism right here, all the bullishness in these pairs, right? And this is a risk sensitive currency. So I'm taking the whole low hanging fruit and I am keeping my eyes on the war. Some pairs that are going to be on our list kind of automatically just because of the relationship. AUD NZD longs, the Zealand dollar will always be doing worse. Whoops, that was my phone. The Zealand dollar, my bad, will always be doing worse than the Australian dollar, just given how hawkish they are. So during peace talks, especially, I would buy AUD, NZD while there's peace talks going on and the regular kind of fundamentals kind of kick in. I would be buying AUD, NZD every chance I got, just given that how hawkish the RBA is, especially with them thinking that inflation was already too high with before the war going on, and then they're going to probably deal with an inflation risk because this is a global inflation rising, right? Because of the war. This is how this affects currencies. I would be along with AUD, NZD during peace talks, taking it as a 1-to-1 or a 1-to-2, right? I planned on getting a 1-to-1 out of this, and I got like 0.3 or 0.4% to start my challenge. And then obviously, if we do have the peace talks going on, NZD USD would be reaching for these highs from this POI. If we don't have any peace talks and we have safe haven inflows into the dollar, the New Zealand dollar will naturally fall to the US dollar, and then we'll start to come down and take out these lows as the weeks go on, right? So it really just depends on current risk sentiment, but this is my markups for if we do have peace talks and the dollar falls. I was going to take it up to this high and basically wait for another displacement to happen in order to hop into this high, which this is so swept. Then this would be the high that would cause a displacement. I would just set a limit order like we have been doing before if that was the tone, right? And so on top of that, we're still above the 200 EMA. We have AUD CAD on the list as usual. We're gonna keep these on the list since I swing. This can be on the list for months and months and months, right? AUD CAD on the list with the hawkish RBA. If we do have peace talks, the dropping oil prices are going to drop the CAD since it's a commodity linked currency. And AUD CAD at that point would be very long, right? So AUD CAD would be on the list just based off of risk tone and things of that nature. We did have like, I don't care if it was a break even or a loss a while back when we tried to do AUD CAD. I would personally clear the chart off, maybe except for the daily imbalances and things of that nature. Yeah, how far I went down. Where we went on to a further down imbalance. So if they were long on that, it would definitely be from this imbalance right here in this area. And when I can't have when I don't see a positive POI, I go up to the weekly, monthly, daily. So that's why I'm just gonna clear it off. That's how I like to start my weeks. So no clear picture really on what that is. You're gonna have to wait for a couple daily candles to print in order to open up and see what it's doing. But as of late, it did take out some botched liquidity up here in this area. And we did have a low right here. Obviously, as the daily is not going to come all the way down here and take out the low. That'd be ridiculous to expect. But if we are long, we would be long from either from this imbalance right here, very likely. So I would mark up the POI that have been given in the current candle setup before the market opens, and that would be long from this daily imbalance just in general, because this would be sell sweats right here, displacement right here, and then coming back into the POI right here. So I would mark that daily imbalance up right there. Where is it? And then put some buy side liquidity right here and kind of just notate the last place that they established a new bullish trading range, right? This can be invalidated with fundamentals and it can go down. And in that case, this sweep right here above would be a buy side liquidity sweep. As a matter of fact, this would be an even better one right here at this high right here, tip of this candle, because they did sweep that as well. And it would be very easy to take this down for a couple percent gain. I'm only going for between 1% and 2% at a time. That daily imbalance would be our POI, given that we have split the high right here in this area on the daily. And then you would just set it over here on the 4 hour, but like inside of the daily imbalance right here that was set. So that would be my POI since that was the POI left before the move up. What else? Euro USD shorts, given the explanation of the energy shock crisis, are going to be automatically be on the list. We did take EU shorts for 2% gain. I pulled down to 3% to see what was going on. I believe it was 2% gain. We might have closed that. Give me a second. Which one was? So GBP USD we took for a 2% gain with target smash, and the EU closed in profit at like I can't remember what percent it was, but we closed it in profit at 1% with the stop loss hit, moved into profit. So we ended up gaining 3% last week total. So because we moved our stop in a profit, and then we had that USD weakness on the Iran war talks, and the long happened, and we got stopped 1% in the profit, and then that stop got hit. So we closed 3% last week. A lot of people are like, well, that's not a lot. 3, 6, 9, 12. That's 12% every in 4 weeks if that's what you can average. And then what's that on 200K? 2, 4, 6, 8, 10, 12, 14, 16, 18, 20, $24,000 a month before profit split. So perspective is all about how much capital you actually have. And what that equates to, 3% a week is perfect. So all really about your perspective. You don't need to close some crazy amount. So we ended up closing that at about right here. When you moved our stop loss in the profit, it was about 1% gain, maybe 1.1% gain right there. And we set that down for that much because we moved our stops. We're gonna be doing that a lot more, trailing our stops. But given, like I said, given what they said about the energy crisis, right? When you also had displacement here, a sweep here, into a data order block, it came down, established a high, established a low, swept the high, swept the low, the displacement happened. 4 hour block here, we're bound to retest that. I would put this as my POI And then obviously we had a 1 hour POI right here as well. So this was the last POI I controlled when we did it. This was a limit order. And we did have that hit that limit order beautifully and with a sniper entry right here in order to have that 2% gain. This would be my POI again if we did very short Euro USD, given the last displacement right here that happened. So this would then be a high resistance liquidity void all the way down here to this low right here, and even further as fundamentals kept showing themselves as short, right? So as long as the energy prices are going on, Euro USD would be short. As long as the USD is getting those inflows and we're having risk off, or when they're not taking any risk and have inflow into safe haven currencies, we're gonna have gold longs, we're gonna have Euro USD shorts. I would reanalyze gold a little bit harder because I haven't really been reading on it too much, but definitely Euro USD, GBP USD, and then USD JPY longs potentially as well. What else? Stop loss I would probably put just behind here. Not expecting it to come back up here and hit this POI because this was the last POI before the breakdown. So I would pull that down for about 2% gain from minute order right here. And some of you can even if you want to take it down to this low right here, the low that's left, that's the low that I'm coming for. But I typically keep my R's between 2% in this market. Otherwise, you get cooked. So that's Euro USD and GBP USD shorts automatically are on the list for that. And then obviously we have NZD USD shorts, just risk sentiment. I like to sell NZD USD a lot. It has a lot of clean movement after risk sentiment, almost more than AUD USD sells with the hawkishness of the RBA. There's still that little bit of a backdrop of risk sentiment when the US dollar has safe haven inflows will take over and it won't necessarily drop that much. So if you look at AUD USD, when the dollar was doing well, it still struggled to really make a crazy effort down right here. Kind of was very choppy from that last liquidity take from that last displacement from here to here, right? And now it's returning back, trying to return back into the POI from this daily order block where we had our limit order at before for AUD which is long. So during times of where there is peace talks, for sure buy AUD USD. And during times that there is not peace talks, I would just leave AUD USD alone, to be honest, if I was you. But we do have this guy right here. You can see whenever there's have been peace talks in the past, it's had very nice overall moves down, right? Just from here to here, this short after this displacement, right? Swing high was swept here. We swing high, swing low was swept. We came back, hit a POI somewhere over here and went down, right? Very aggressive, very full candles, a little bit of choppiness, but eventually the candles became very full, very aggressive, and came down. Same thing with this trend. It was a little bit choppy. Overall, you would have had a nice run down in less than a few days. And the same thing here, risk sentiment changed. You can see the reversal. All these candles were very nice, full candles, right? And then risk sentiment changed again by Friday because it was peace talks. So we started the bullish trend up. So you can see how liquidity moves in kind of like a context with the fundamentals and the risk tone, right? Things can change in an instant, and that's why the headlines are so important to keep up with as to what the tone is going to be overall. So that's automatically on the list short for if there is, I didn't want to do that. This that's automatically on the list short for if there are peace talks, and I would just sell from the last batch of liquidity taken. This would be all cleaned off and then changed, obviously. Another way, so I gave you AUD CAD, AUD, NZD, and then WNY, NZD, USD, Euro, USD, GBP, USD, USD Swiss franc sales as well would be very profitable. My bad, longs for when we have risk on markets and my bad, risk off, and they're flowing into the dollar. I would say USD Swiss franc longs would be very profitable for a shorter trade. As you can see, I've been kind of tracking USD Swiss franc longs for a little minute now. We do have a seller swaps right here and a high resistance liquidity void here after the displacement here. And now I could see price returning back into take out this sell side liquidity right here in this area in order to hit this POI right here from this monthly order block. So I'm looking for 2% there. But if the war does continue and we have safe haven inflows into the dollar, aka risk off, that the Swiss franc will not do as well against the dollar because it's still not being, they're like starting to think that it's considered a safe haven currency still. It's not gonna like its status doesn't change, but it depends on the situation. Investors will be like, I don't want to use that as a safe haven right now because the dollar has more better returns, or et cetera. And they might change up their strategy. But I would keep my stop loss behind this monthly order block and basically keep a limit here, given that we already had displacement. How I know that this is displacement. Prior to this was this displacement. So I swept buy side liquidity and displacement price return back here, establish a low, swept the low, and then never swept this low right here, only to build a high resistance liquidity void long and take out this high as another displacement kind of internally going up to ultimately, as long as we have safer inflow, the goal would be this next major high right here in this area. So you can see how as long as the risk tone is the same and then the fundamentals are the same over time, you could watch this happen over and over again up to this high and get maybe 2 to 3 entries over time. You know what I mean? Displacement again at some point in the trend, entry, 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 entry. Is every entry going to trigger? No. That's not impossible. Every entry is not going to trigger, but you can execute the plan knowing that that's how this is going and that's how this is working. I like to move based off of that. Euro Great British Pound, they have mentioned about all of the Euro downsides as well. How did I almost forget this? And one that was like aside from risk sentiment pairs and things like that, and the low hanging fruit that had a really, really good case that I saw was Euro Great British Pound sells. Why? Because the backdrop for the UK economy overall is that they're going to potentially have to hike, right? Without the natural fall of the pound to the US dollar, when they do have safe haven inflows. Euro British pound bonds was, or shorts, my bad, was something that I was very interested in because all the stuff you priced in for the euro last week, especially, that was very negative. And then the things that were priced in for the pound that are positive. Overall, if you compare those two currencies, not to the dollar, but to themselves, the pound has the more bullish case at this current point, right? Especially with everything we just read. So I would start to analyze your Great British Pound shorts, and you like when you have a strong case, you have to look as if you're getting ready to take that trade, and you're prepared for that trade to work out and play out for you as a trader in terms of confirmations, right? And then when it doesn't, and the actual story changes, what you do is you change your narrative. You leave it alone. You're like, this is a neutral trade. I'll watch it for a while and see what's up with it and if it develops, and that's the goal. So we're gonna go to the monthly. I don't really see much on here that I like to see when it comes to price, but I'm planning for Euro Great British Pound sells given the risk tone, not the risk tone, the fundamentals between the two. I did post them as well, so you should be able to literally see that right now about why. So since they wanted to respect this weekly order block right here, this was the last candle right here, when this hasn't been swept, I would consider this a weekly order block. Sometimes order blocks are not exactly bullish and bearish engulfing. Sometimes they are the last bullish candle left before liquidity started to shift down. So out that, and that's perfect. That's a 50% of that. That's beautiful. We got weekly order block right here and some context. Get back over there. Some context, right? Because before that, we had a weekly buy side liquidity tape right here, showing that the liquidity right now and at this current point, unless things change this week, is pointing to short. And this is in context with everything that we read too on the smart ballot that happened last week that caused the pound to fall. I would say, yeah, I would say this right here at the time was the low to that high. You always have to be thinking like at the time of the candles, right? Which that's the wrong one. Sell side liquidity. After this one, we'll end the video, but you can see the high was created, low was created. They didn't take the low at all. Swept the high, came back for the low. That's the displacement lower. And then we had a weekly order block, and this is on the weekly. So we had a weekly order block created as well in there. Took me, I had to look, but I determined that this was indeed a very nice weekly order block. And then you look at what is here, and replacement of that is pretty much the same deal. So I would consider these last candles right here, last bullish candles before the drop down, my 4 hour, my daily order block right here. Not always the same every time. Kind of scaling the scaling it in from a top-down analysis from the weekly down. So that's a daily order block in reference to the last displacement. I won't even draw that in. I'll go down to the 4 hour. I'll go down to the 4 hour. It's going to cloud my charts a bit. And I don't really like that. Let's go down to the 4 hour from the weekly order block and then scoot over and look and see. I'll put a placeholder right here where on the 4 hour was there a POI in reference to this weekly order block. So we're going to put it about right there. Go over. If it'll even let me. Sometimes they tell you run out of data. And I just have to look. There's an imbalance here on the 4 hour. Do you see this? And there's a liquidity sweep right here majorly on the 4 hour. So definitely gonna draw that in. In this case, since we already have this, we can start using our rectangle tool to differentiate our higher time frame from our lower time frame. Let's grab that and turn that off. Let's grab this and put it up to here. That's fine. That's close enough. And then we can just yank this over. We got 4 hour imbalance. All the way over. A little much, so you ain't go over this much, but it's fine. I just zoom out some. It's the key. Not scrolling continuously. Yeah, that's cool. We just pull this over to about right here, where it actually is. All right, so that's weekly order block on 4 hour imbalance. And then within that 4 hour imbalance, what happened, right? A high resistance liquidity void obviously started down for the sell from that weekly order block. And this is our context for in place with the fundamentals as well. Yeah, sweep right here as well. Start a some form of displacement. And let's just say this was the extreme low right here to that extreme high. Or my bad, it wouldn't be these guys, it would be these guys. This was the extreme low to that extreme high. So you can see what happened here, but let's focus on what we currently are in price and why, right? We quite clearly respected some type of point of interest right here. Let's go, you can go all the way up to here. And this was what? Another 4 hour imbalance, beautifully placed. But I would argue that since this was swept as liquidity, it cannot be used for an order block. Any order block that's swept by liquidity, as this one is right here in this area, that's displacement. Look how extreme this high was within the range on the way down, right? So swing high, swing low, right? This is clearly displacement right here. And this cannot be used as an order block because of that. Order blocks that are real order blocks don't get swept by liquidity, literally at all. So that's buy side liquidity right there. And then that's sell side liquidity right there. And the reason why I'm able to do this so easily is because I've been trading this exact way for a long time. Like I was back and forth between support and resistance, break and retest, kind of combine this with other things, and it just didn't work. So what they did respect though was this imbalance right here on the 4 hour, if you see right here, between this candle right here and this candle right here. So that's the imbalance. It made it to the top of the imbalance, indeed, but it still respected the imbalance, even later candles, as you can see. So as you can see, I pay attention to where did the price last respect, bro? Like where the price in reference to liquidity sweep. So we can mark this up too. We had buyer swept right here in this area. I have mostly stopped marking up where the buyers were swept at, but I marked it up for you guys so that you guys can literally physically see where the buyers have been swept and where the displacements happen. And when that I'm not talking about the little small ones, but I'm referring to displacement. And now you can see how I broke that down. Now we're within this range, right? Now we can see the range that we're trading range that we're in. We're in from this high right here to this low. So if I was to do that, I would be able to grab this premium discount tool and get to the top of that maybe. Pull that all the way down to the lowest low. And you can see, let me flip that. Didn't mean to do that. That's perfect. So we have premium discount, and you can see if from the high that was left after the sweep, still that was low. Price came from discount to premium, which is what you want to see when you're selling. You want to see back in premium in the green, and then price fell back into discount, and you can see that the overall goal is to come for the lowest low, right? That is always the overall goal. So in reference to it respecting this, we were in this trading range, and this was the POI and control right here at the time. If somebody would have saw this displacement and then set a limit, even down here, price would have wicked in right here at about the 50% of the imbalance, and then you would have had sniper for target smash for however you wanted. So that goes to show that the moves are there. It's just how about your analysis, and if you are able to be talented enough to predict the moves early, because this is a nice like 1 to 8, 1 to 5. If you had your stop loss behind this, right? And then price, if you notice, price never technically swept this low, or did it? Let me see. Yeah, it did actually. It did sweep that low. So at that point, this is actually the low that they're coming for, right? Price came back up to see and visit the POI right here, right? Likely gonna have to go down to the 1 hour, and sometimes you will have to do that. All on the way down, right? It came back up, it hit the POI right here and went back down, and then came back up and revisited it, and then another higher resistance liquidity void formed to fall under the 200 EMA and go for the overall goal down here. So with that being said, I'm gonna put a placeholder right here real quick. I would say about right here. That's good because it had multiple hits in that area. And since I don't see a 4 hour POI right here, I'm willing to bet if I go down to the 1 hour where my placeholder is, I'll be able to see something. A 1 hour order block, beautifully placed. Beautifully placed. Let me grab my magnet real quick and place that right there. Drop that up there, and then slide it over. So you change the template to 1 hour order block. I do have my stuff color coded, so I know which ones are going to be which. I'm going to use a few colors, and then on the higher time frames, I try to use this line tool in order to kind of keep my charts overall. Go on, give me it. Maybe not that far over. It's a little much. Feel about right there where price currently is. That's a 1 hour order block. And you can see what's getting ready to happen here, right? In reference to liquidity and how I explained to you these things work. We have a higher resistance liquidity where it now forms. Like the more price from the POIs, the better. And you're probably like, well, then how would you handle? And this is another, and this is how you know price is going down. Another sweep right here in this area. Oops, you would do that. Another sweep in this area right here, real quick, of a buy side liquidity within the bearish range, like I have been telling you. And then this would be technically right here, would have been the low to that high. Remember, the low from the high is always pushing to the right, and it's never to the left. Never look left for the low. It's always traveling to the right side, right? Price only travels in one way, from left to right. If you don't, so you don't look backwards for liquidity, because the liquidity has already been taken. If you look backwards, and then we have sell side liquidity. So that's displacement. We had a 1 hour order block right here again. And if you look at the 4 hour, there might even be a POI up there, but I have not looked at that yet. I'm just looking at what I see on the 1 hour right now, because that's where I'm at. And it can even be pulled down a little bit more, a little higher. I wouldn't do that big. It just matters that it's on it. Second. I'll pull it down just a bit more, maybe like right here. That's cool. Beautiful. So you can see how it swept the liquidity right here, buy side liquidity again, swept the sell side liquidity. That's another displacement, bro. And now you're in a new trading range, right? What did it do? It came right back into the POI and swept another high and continued down. Go back now to a 4 hour. You can see that ended up being a 4 hour imbalance as well. That ended up being a 4 hour imbalance that it respected on the way down after the displacement, came back to the POI that was left. And now we're on our way down. So if we did have or actually we can even mark this even better, so 1 hour imbalance right here. 1 hour imbalance, or my bad, daily imbalance. I'm so tired. Daily imbalance right here. Even better, we have a higher time frame POI. Always go back up time frames. So since this was the result of the last displacement right here, if this is short, then and we don't have another displacement, right? I would set for sure set a limit right here with my stop just behind the 200, maybe like right about here. And I would say a displacement with at max drawdown, maybe hitting the 50% of this order block right here for about 2% gain, which would be basically to the low right there. And these are the type of trades that you kind of want to get um, at that point. Potentially even taking out the high right here at this point. Because this is the last displacement. It's bound to be one more when the week starts. And that's what my POI would be for that. Just kind of breaking it down from a higher time frame perspective. If you have any questions, then obviously the draw on liquidity will be down to this level. So potentially even 2 entries on the way down if price continues to prove and fundamentals continue to prove that we are short indeed on this pair. You may even be able to give one more entry over the next few weeks when it's further than 2%. If you have any questions about the week, let me know. I'll be sharing an updates as usual, and I will share reports as they upload them. See you guys in the next video.